Hi, welcome to the Oak Trader Report on the 10th of March. It's just coming up to 9 p.m. Hong Kong time in the evening. Just thought I'd put this onto the Oak Trader just to let people know how upside down things are around in the world at the moment. You've got embassies and nations falling out with each other all over the world. We've just seen the Panamanian ambassador kicked out of Venezuela, and then you've seen huge issues. Saudi Arabia, the United Arab Emirates, that's including Dubai and Bahrain, have pulled their envoys from Qatar, and Egypt's pretty much done the same, or at least on as bad terms with Qatar as well. And you can see things are falling apart in terms of allegiances in the Middle East here, which could be a concern. So things aren't looking that great politically in the Middle East at the moment. There's a lot of accusations flying around. And this was a very strong comment from the Iraqi Prime Minister Nouri al-Maliki. He's basically accusing Saudi Arabia and Qatar of being behind the terrorist acts in his country. And if anyone knows anything about the political situation and religious situation there with the Sunnis and the Shiites, it's about 10 times worse than the Protestants and the Catholics at the height of their hate. So there's huge divisions in the Middle East and the Arabian Peninsula, and it's going to be interesting over the next year or two to see how this all plays out. But it seems a big dividing line is being drawn in the Middle East, and parts of North Africa, being Egypt as well. So it's one to watch out for. I picked this up about 3 days ago off a Norwegian military website. I don't know how the hell I ended up on there, but I didn't really see it on any of the news feeds, and I wasn't looking at anything in particular. I was just researching Norway in general, and I came across this military website, and these are the ships of the 16 countries participating in exercises off the coast of Norway, starting, I believe it was yesterday, and it's going to be going on for about 8 to 10 days. And I had quite a laugh at the map here. It just covers Sweden and Finland. You can't quite see the border of Russia on the right hand side, but when you look at it in its graphic form in terms of where the ships are placed, where the soldiers, it's very close to the Russian border. And is this just another attempt at intimidating or getting the ships and the pressure in the right position, attacking Russia from all sides diplomatically and setting up war positions as well? There's been ships that have left, I believe, Darwin, Australian warships, under the pretense of helping to look for this downed Malaysian airliner. So in terms of in circulation, there's a lot of warships around in the Gulf of Thailand at the moment looking for this missing airliner as well. And sometimes there's plans within plans. I don't tend to overlook at these things, and I think one of the broadcasts I listened to a few years back, the international forecaster, that's it, he was always making predictions about Iran. It's going to be war this weekend, and there's a build up in the Middle East, and there was just so many things that didn't come to pass. But if you keep predicting, I guess one or two are going to come true. And I'm not saying he doesn't have some good information. I believe he's passed away now, but other people are running it. There was some very good information there, but you can't overlook things, and this could just be an act of pressure. It could have been something that was planned well in advance, put back into the system. But there's 16 nations participating, and you can see how they're encirculating Russia during these exercises. Okay, this is the Dow Jones. Obviously this action here, extreme volatility, doesn't look that volatile simply because of the parameters of the chart. You've got between these parameters 2000, and you can see the type of bull movement it had from the mid 80s, the early 80s, all the way up to 2000. We've looked at this before, and we can clearly see that it's either in the fourth or fifth stage of its bull market. At the moment, I have lightened down on some of the stocks that I hold, but again I look for individual price action in each individual stock. I will look at indexes to try and give me somewhat of a clue, but again I will always rely on the individual stock action. But from here, if you look where my mouse is, you've got a nice triangle breakout, and you can see it differently on this chart that we're using today. The consolidation area here and the breakup. And this could be potentially, if you follow my mouse all the way back to an area back here, it looks almost kind of similar, with a spike up and then a flapping around for a year or so before another uptrend began. I'm not saying that that's going to be the case, but there's lots of ways you can match charts to charts of the past, like people have been doing recently with the 1929 chart. Again, you've always got to try and wait for price action. Price action will give you the clue to get out. Markets just don't fall completely out of bed, even when it's quite severe and quite a shock to the market. After the big shakeout, there's usually what you not necessarily you could call it a dead cat bounce, but a bounce upwards towards the area where it fell off from, and that enables people that didn't have a chance to sell out at those particular moments. But quite often that is the case, so I wouldn't be panicking too much about a huge crash in the Dow. I think if there was an unexpected large shakeout to come, the market, as we've talked in previous screencasts, would go to that level perhaps of around 14.5 from where the previous move cycle started. But you can see the Nasdaq here, huge run up, and then people are saying that we've entered somewhat of a new technological bubble, so to speak. I just saw another company offering cloud services that are going to list on the market, or potentially considering to list, and the company really just offers online storage. I mean, there's so many people involved in that game, from Dropbox to other companies all around the world. It's a competitive field, and in reality, I don't see the point in investing in such a company. So you can see that somewhat of a top is approaching, and Facebook buying, or trying to buy WhatsApp. If this complaint goes through, perhaps there'll be an injunction to stop that, but it looks like it is. I mean, I think it's a ridiculous price. I saw a price of cars.com, I believe the website's called, and they're looking, perhaps estimates are saying, of around 3 billion. Now that's a useful website. It actually serves a purpose. People are looking at different cars, and they can choose who offers the best prices for those cars in those areas where they live, and it's useful, and it probably turns over a profit. I'd have to look into that more, and that's going for about 3 billion, whereas WhatsApp's apparently gone for 19 billion. So I would say, just from examining bits and pieces coming out in the news, that a bubble is approaching in the technology stocks. There's a lot of substance also behind some technology companies, but companies like WhatsApp and the other Dropbox type company I mentioned, I think it's called Box.com, I'm not 100% sure. I feel that there's a lot of overestimation and bullish perspective being entered into the market with some of these IPOs. They're just never going to have a chance to turn a profit. The TSX from Toronto, Canada, and you can see here the downtrend being broken. Draw along a line along the side, and you can see the flat top triangle it's broken out of, which is a good sign. Not bad accumulation. It's moved up to the next level, then moved up again, had a nice little shakeout where my mouse is, and the TSX to me looks like it's entering a bull market. Of course this could be a false move, but eventually, sometime in the next 6 months to a year and a half, I think a bull market definitely will start in the TSX, just from the way the market's shaped up here. But again, wait for price action to confirm, but this looks to be a good signal here. Sometimes jumping in at this point, that's the point where they will shake it out and move it back down for a period of more accumulation. These people are not in a rush, and dependent obviously on global situations as well. Sometimes they'll bring it down to reaccumulate, but from how it is here, just looking from the index, it does look pretty positive. So again, if this doesn't take off from here, I would be looking at this to take off at some point, in the next 6 months to a year and a half. It looks to have quite a coiled spring here, and the move that could develop, I think, could easily see it maybe move above 15,000. This is it on the monthly. You can see it's also had a huge run up. The big shakeout in 2007, 2008, the run up, whereas the American market continued going up because of Canada's close correlation to commodities and perhaps overvalued housing market, a few twitters in a few people twitching in terms of worrying about prices. It hasn't had the same moves as the American market, and it doesn't have the same following as well. But you can see here that it definitely has broken out of this sideways consolidation area, and it looks to be heading up. And I think we could be approaching all-time highs if this move carries on over the ensuing months. Bad news out of China and Japan today. That was just a little slide there to remind me. You've got the downtrend here in the Nikkei, the breaking of it with the debasing of the currency. That's what's pushed the stocks up, the debasement of the currency by the central bank. We're at a consolidation area. Are they going to debase further? We have what looks like a head and shoulders top formation here, with distribution taking place here on the left side where my mouse is, the spike up and then coming back down, and perhaps some distribution here as well. I would use these areas as pivotal point areas. Again, I have seen moves with the same type of price formation patterns move up from here. I think it all depends really on what the Japanese central bank are looking to do. A nice triangle there and a breakout, and the markets come right off, and I think they're waiting for more juice. Is more juice going to be made available? Perhaps, and if it is, then this market should carry on the move upwards. But this is definitely an area to be cautious. You see this line here, it's broken that uptrend. Usually when that happens, it's a good sign that the market will move back on up at some point, because tricking the trend followers is just all part of the game. It's how you make money as well. They're not just after tricking the public, they trick a lot of automated trend followers as well. So this perhaps looks like it might come down to 14, and then we could see it move on up again, but it looks like a consolidation area here and somewhere to be a bit wary. And on this longer term chart, you can see the type of huge downtrend it's had, starting from its peak back all the way in mid 1990, 1991. You draw a line all the way down from this point here. This is the first time in all these years that it's been broken. The technical picture is starting to change slightly. Now usually when it does break a huge huge downtrend like this, we could see it move back again to the old highs previously where my mouse is here, around 12,000. It come off, shake out to 12,000, looking at it from this point of view on the longer term chart. But you can see there's been some downtrends broken, but they weren't gradual. So there hasn't been a tremendous amount of base action. There was some good looking Japanese charts, but I would say even if they juice this rally a bit more, I can't see it going much higher than 20,000 in the near term future. And if it was to fall off again, then I would say around 12,000 would be the level that it would stop its downward move and reaccumulate. And ideally, if I was the Japanese, I wouldn't juice it anymore. I'd let the market fall off. So what if the market falls back down to 12,000 and just build it up from there on some solid footings? They've got to be very careful, the Japanese. A lot of the debt is held within the country, but in terms of credibility, they can't keep juicing their economy. It won't go on forever. This is the best looking chart, the Shanghai. I think it's shaping up at some point. I've talked about it in previous screencasts over the last 2 or 3 months, the last 6 months, that my eye is on a lot of Chinese stocks at the moment, basing along. These bases can, in individual stocks, take up to 2 or 3 years to play out. They can take a hell of a lot longer, but on average, We're looking at around 2 years. You can have good base action after 18 months, and this looks to be shaping up with a nice rounding bottom here. But again, I would be very wary for this to be a pivotal point. If there was something to come out of China, or there was indeed war over the next few months, then we could see this market easily move back down to 1500 or even 1000. I think personally the odds are that around the 1800 and 1900 level, that will be the low. But again, that's just a worthless prediction. I'm waiting for price action. Once this downtrend line is broken, that's when I'll start moving heavily into China. But it's definitely on the watch list, and over the next 6 months or a year there'll be some immense bargains to be picked up. And looking back, probably in 9 to 10 years time, people will look at this price here of 2000 and curse themselves as to why they never excuse me, participated in the new Chinese bull market. It may take a long time to play out this base level here, and I'm not advocating jumping in and betting the farm here, the level of the Chinese index. I'm just saying that it's time to be aware that funds should be put aside. So when one market is starting to fall off, China should start to pick up. And once these reforms are in, they may take a long time, but once they're in, we should easily see this market move up to 3, 4, 5,000 over the next 6 to 7 years. You can see it here on a shorter term chart, just in case that this is the point where it's rounding off, and this is going to be the low of the bear market, which I doubt it. I think there's more to play out, but who knows, price action will tell me. But it does look like it's curving around quite nicely, so I'm definitely keep an eye on the Shanghai. But again, these are the pivotal points to watch, and if it drops below these significantly for a day or two, then I believe the market could go considerably lower, to around the 1750 level perhaps. But if it started to break these lines on the upside, the 2-2 line here, the 2-4 line, and started to consolidate at a higher level, showing me that it was becoming harder to buy the market, then I would be more convinced that the big move, the big bull market in China is about to begin. But I don't think we're there just quite yet. But put it on your radar and set aside some funds. Over the next 10 years, you should see those funds quadruple in a bull market like China could produce. And you can see it here on the shorter term chart, the curve in action, and it looks quite nice there, the breaking. But until any length of time has passed, or certain trends that go sideways are broken, then I won't feel as confident that the market's beginning its bull move. And I'm on the lookout, as I say, for the market to shake out and have its Pearl Harbor moment, so to speak. I think it was about 6 months after Pearl Harbor, or a year after Pearl Harbor, the bull market began in America. And America spent the Second World War in one of its best bull markets in the last 25 to 30 years. It just shows you sometimes fundamentals and geopolitical happenings and trading quite often don't mix. Sometimes you've got to have a brain that's wired differently. The ASX 200 here from Australia, you can see the triangle that's broken, the breakout. These usually don't go that high, but I could see this moving up to a new level perhaps. And breaking out from here. It looks to have broken this sideways level here, and this shakeout here where my mouse has reached that level on the downside. Don't like these action bars here at this consolidation area, and for me at the moment this consolidation resistance area is acting like a pivotal point for me to tell me where the market is going to go. I'm more inclined to say it's going to go up, but shorter term action hasn't looked that good. So it's one of those markets where I'm waiting to see price action to develop to come up with a more authoritative opinion. But it does look like a good breakout here, and perhaps here as well. You see this triangle, and these three bars are the shakeout bars, and then from here we're going to see it move up. Instinctively, that's what I say, but again, I don't like to trade from instincts. I like to try and just wait for more price price action to develop and break past these levels of 5.4, 5.5, and then I'd know it was in some sort of uptrend. The STI index, Singapore, you can see where it had its peak here. It's come off, and each low, each high has been lower than the previous high. And just thinking while I'm looking at this chart, it does look to me, unless this line here is broken and it stays above it, I think it may break it, but it may not be the move that signals it's going up. I think it will be a false move, and to me this looks like it's going lower. You've had three lower points here, 1, 2, 3, and you've had the slow degrading of the market, moving down, signifying selling. Unless some serious movement came into the market on the buy-in side, this market, I believe, will head lower over the next 6 months to the year. But looking at it on a shorter term level, the last 3 or 4 months, this perhaps looks like some sort of head and shoulders bottom here, with the accumulation action here and here, and the drop down, which shakes a lot of people out, and these shakeouts could have been for that purpose as well. So it's just a question of waiting for this trend line here to be broken. Really, it's broken this one on the downside. If it can break where my mouse is here, break that significantly, then I think the technical picture of the market would have changed. But until it can do that, to me it looks like a bear market's developing. And you can see it here on the weekly, and this is the gradual downtrend here. It looks gradual because of the parameters of the chart, but until that is broken, I won't consider going long the STI index. It's as simple as that. But if it does break it and it consolidates, then I would change my opinion and go long the STI index. But at the moment, it's one of those markets where I'm just waiting for price action to develop. But on the probability side, it looked like it was developing some sort of bear market on the shorter term chart. The longer term one looks more stable in terms of its action, of it staying around these levels, and I'll show you it on the longer term one as well. This here, the pivotal point of 2,500, would look to be the level that if the market was to crash, it would break through quite significantly, and that looks to be the pivotal point on the STI index. But again, to me, the market looks a bit weak here. This last bit of action looks to me like a bit of distribution coming in the market, and the market failed in its move up. Whether it was the wrong time and people have been caught with their pants down a little bit, who knows, but we just have to wait and see how this develops. But if I draw a line along there with my mouse, you can see the line that I'm talking about. Once that breaks, then I would consider a long position. But if I was long the STI index at the moment, I would reconsider that and just take a hold in terms of direction, in terms of your thinking, and just wait for price action to signify which way to go. The Hang Seng, you can see the triangle pattern here, and you draw a line along here as well. And if this was to break out, I would go heavily long the Hang Seng, and you just have to be patient as a trader. It hasn't broken out, hence I haven't gone long the Hang Seng, but it's definitely on my watch list alongside the Shanghai market as well. The future looks really exciting in terms of opportunities. Over the next 6 months we should see some major opportunities coming up in many different markets around the world. And you can see this point here, if with my mouse, a downtrend being broken about here, and the market beginning to move sideways. And if the market can keep above where my pivotal point is here at around the 21,000 level, then I would feel that this market would have a chance of developing further. But again, who's to say what's going to happen geopolitically in the world, and there could be a Pearl Harbor moment in China at some point to really shake people out of the market, and that will be the time to look at buying into the market and picking up some real bargains. The IPC in Mexico, it looked like it was going to move up from here, and it's just faded to death. Again, it formed a triangle consolidation pattern, and again it's entered a very steep downtrend here. When this steep downtrend has broken, we may see a violent move upwards. But again, it's a very, very steep downtrend, and this just shows you the importance of being patient. If you draw a line along the sideways consolidation, it looks to be shaping up into a great base action. But the key, the final piece of the jigsaw didn't happen, and that was the breaking out of the consolidation accumulation pattern. And it's just edged downwards ever since. And you must obey price action. If price action is telling you, and it is going lower, if you did try and anticipate, you must get out. Don't hope that it's going to turn around. It's better to take a loss and to have an insurance ethos outlook in terms of your trading portfolio than to be a wild gambler. But this could be a move here to watch when this downtrend line is broken. But again, when a steep downtrend line is broken, usually the move that comes off it isn't that significant. Usually, it depends on the juice being added to the market. If there's a lot of juice, the move can move up very quickly. But to me, this looks a bit worrying, the downtrend, and it looks to have gathered pace here. And if it does break these pivotal points significantly, especially it closes below this lowest last point, we could see the Mexican market enter into quite a significant downtrend move. Perhaps that's why the Mexican government are becoming a lot more friendly to foreign governments now and asking them to invest. They're opening up all sorts of different industries. Maybe they can see the writing on the wall, and that's why that's happening, and they're trying to starve off a huge bear market. And it's something Brazil are going to have to do as well at some point. They're really going to have to open up their industry. If you want a successful society, you have to open up industry to competition. It's the only way, really, and it's a harsh world. And in some cases, it's not the right thing to do, but for the longer term, it is the right thing to do. It toughens people up, and it gives people goods and services that are first class. Boa Vista, Brazil, we were just talking about it here. The level here where my mouse is I think the key pivotal point here. If this market is going to form, if you follow my mouse here, like a pyramid down, and then it steadies out, and then it forms another beginning of another pyramid, and then comes back down, it could have that type of bottom formation. But if this is the continuation of a bear market, at some point we will see it break this pivotal point here. And this does look here, to me, just strictly from an instinctive point of view, like a distribution bottom. And it all depends where they occur. Sometimes when I see a move like this after a huge cycle going upwards, I'd be more confident that it was a distribution triangle and that it was going to move down afterwards. Whereas this, I'm unsure, but it does look like a distribution triangle, and it looks like it's going to drop lower. But the position of where it is in the cycle, the longer term cycle, makes me think twice a little bit. And if you draw a line along here, you've almost got the breaking of that trend. So if it can manage to stay sideways a little bit longer, it may be worth taking a look at. But instinctively I think the market would go lower. But again, this is just another market that I'm waiting for price action to develop to give me a key signal to go long or short. And you can see here when the market dropped out of these pivotal point areas, it had a really steep and hard downtrend, and it bounced upwards, and quite often it does that in bear markets, short covering, speculative buying, even value investors get caught out and buy too early. People that are covering their trends get sold out as well. But you can see where it moved up to, this position here. If you draw a line, it's the low of the old movement. So that's quite a negative signal as well, that it only managed to come up to here and it came back down again. So is this the new area where the market will stay perhaps? And I'm just going to watch this a bit further. But just like Mexico, Brazil really needs to reform its industry and to open up their markets as well. Yeah, you can see it here on the longer term chart. The lower highs, one high here, one high, one high, one high, and each one is lower. I mean, what that tells me, just from a commonsensical perspective, is that the market is getting sold. Every time it comes back up to the levels of the previous high, people sell it off and unload a proportion of their holdings. It comes back off, you've got more unloading, and until the unloading is gone, and then basically what you've got left is the public holding the bags, i.e. cashing out their ETFs that are along the emerging markets that a lot of them were suckered into at the top of commodity bull markets and other types of bubbles that we've had in the last 3 or 4 years. They're usually the last people to cash out, and that's when you get the pronounced downtrend away from what you would term like a distribution triangle here. And this here would be the end of the distribution. If you drew a line up here and then a line along here, it's a triangle, and most of the actions come in at the bottom of the triangle, signaling that this was a distribution triangle when it would go lower. But from here, again, use this as the pivotal point. It looks to be developing into quite a significant downtrend on the longer term chart. But who knows, with Brazil, it only takes a few adjustments in the laws, a few decent months, and things could turn around for them, because they do have the whole package, that country. So it's not like they have to battle hard to make things good. You know, they only have to really just perform at a mediocre level to have a great economy in a bull market. But again, they're not performing at a mediocre level, so it's just a question of when and if that will happen. I mentioned this in a screencast a while back ago about Buenos Aires. During terrible fundamental news, that stocks still can go up, and they are a way to protect yourself against huge inflation sometimes and currency devaluations. But if you picture this back in your mind from pretty much 2002 here, the bottom of the market, the stock market's gone up tremendously by thousands of points, and to the untrained eye that looks good. But remember, trying to cash out of shares in pesos, your currency's pretty much become worthless. Hence the next slide. If you look back here from 2002, that's where you had the beginnings of the devaluation, and then giving time for professional investors to unload all their physical assets in Argentina does take time. Another level of devaluation, more assets unloaded by professional investors, and then the complete devaluation almost of the Argentinian peso, the parabolic move upwards, and that goes in line with their stock market as well. As their currency has been losing tremendous amounts of value, their stock market has been buoyant and moving up. And that just goes to show you sometimes, depending on how things play out, that could happen. I don't think to the scale of Argentina, but that could happen at some point in America. You see the 4 or 5 years of quieter action, and then the debasement that happens, and then the end of it happens really quickly. And that's why you could see the Dow going, much, much higher. It just depends on how they're looking to play this. You could see the Dow go much higher and the US dollar go much lower. Or you could see the Dow move higher and the US dollar move higher. You just have to wait for price action. Sometimes different markets do different things, but the Japanese market seems to be following the peso in terms of shares go up, currency goes down. These central bankers and their tactics don't always have the effects that they think they'll have. But one thing you can guarantee, in the end, at some point, you are going to have a debasement of your currency. But going back to the theory of the US dollar, I believe, in terms of where America's at, in terms of its intellectual capacity for the free market, for business, and everything else that's separate from the government, I think the rating levels are excellent. The government just about scraping by at mediocre. So if you compare that to the rest of the world, that's why you'll find that the US dollar is still such a safe haven, because investors can move money into America and move it around your financial markets without having to pay capital gains tax, and also free movement of capital as well within the market. So we could see that developing. Just because things aren't necessarily going well, it doesn't mean that the stock market won't rocket up. It just depends on central bankers and their debasement policies. And here's another chart of the Argentinian peso on the weekly. You can see how it beautifully curved around, and then the spike up. It does look to me, and I did have a check on the daily as well, that it's going to move up higher from here, but I wouldn't be speculating on that, but just saying from an instinctive point of view, it does look like it's going to move higher as well, so it's going to lose even more value against the US dollar, maybe. Here you have the corn chart with an amazing rounding bottom here. That's a beautiful rounding bottom. If anyone's ever read Richard W. Sharbacher's book, he talks about rounding bottoms in there as well. I wouldn't feel comfortable that this move was going to last in corn, and we've seen the feeder cattle market rocket up as corn's come down recently before. So we are starting to see quite volatile moves in different commodities at different times, and it looks to me here that the market will probably instinctively look to maybe reaccumulate around the 450 level at some point. Just depends on really what happens. I do like the commodity markets. At this point I wouldn't be trading it, and again I'd just wait for more price action to develop. But you can see what we were talking about with Brazil, where you've got the lower highs and it's gradual, while professionals are distributing their holdings here, here, here. Then some of the ETF holders, the private holders that take a longer time to be convinced, and then the market completely drops out of bed. And this is what happens, that there's levels and stages of distribution, and then the market drops, but each one gets less and less. And that reminded me a little bit of the Brazilian market, or similar, but the Brazilian market was a little bit more sideways. It hadn't dropped like this. But ask yourself a question. You see this spike here right before the market crash, where my mouse is. It went up all the way to nearly 740 out of this consolidation area. Again, there's plenty of cases for the CFTC to investigate commodity manipulation, but they don't tend to do it. I mean, how can there's so many different cases where you look at commodities before they have a huge move up or huge move down. There's always a fake rally or a fake shakeout just before that huge move, which makes trading much more difficult if you watch the market very closely. If you watch the market very closely, it's a very difficult thing to do, is to time and judge all these different shakeouts in the market. And it was extremely wild back then as well. And then you've got orange juice here as well. This is a commodity here. You've got the big downtrend, the expanding channels, the downtrend here that's been broken, the consolidation area taking place in a high range. If this consolidation area was taking place at say 120, I would see it maybe perhaps as a distribution area and it would go lower, but because it's taking place higher, I think this market is about to develop another double spike, and perhaps we could see it at around the 170 to 180 level in the next 3 weeks to a month, and it's just something instinctively that I perhaps might do, just to take a position. And you can see here the market, and it's broken out of the sideways move here. We may see a little shakeout back down to this level, or this could be like the previous chart I showed you in corn, where it moves up slightly and then rockets down. The only reason why I don't think it's the same as that is because of where my mouse is here, this action area here has taken place in quite a high range. So I'm fairly confident that some quite decent players have accumulated large positions in orange juice. It doesn't mean they're going to win the battle and push it up to 180, 190, but I suspect they are. And I would say, from my own guesstimate, just looking at it from a trading perspective, speculating that the market would go higher from here and look to hit around the 180 level. Okay, that's it for now. Check out some of the texts, some of the articles I've put onto the members section over the next couple of days if you can, and there'll be a couple more videos being uploaded in the ensuing days. Have yourself a good day. Over and out. Take care for now. Bye bye.